Welcome back. Today we're going to talk about what every mortgage company and broker in this country doesn't want you to know. They don't want you to know that nearly every single mortgage loan is marked up by as much as 3 points by the loan originator. Now is a good time to cover a bit of terminology, because you can't get far refinancing your mortgage without coming across the term points. So what is a point? A point is simply 1% of your loan amount, and points come in several varieties. There are the origination points you pay to the mortgage company or broker for their part in setting up your loan, and the discount points you pay in exchange for a lower interest rate or more favorable loan terms. Points can also be paid to your mortgage company or broker as a bonus for overcharging you, and that's what we're going to discuss in this video segment. Now, these bonus points we're talking about are paid to your mortgage company or broker by the wholesale lender. So if the wholesale lender is paying the points instead of you, why should you be concerned? This money the wholesale lender pays is a reward for your mortgage company overcharging you. You're already paying origination fees for this company's services, often in excess of 1.5 points. And this is more than ample compensation for the amount of work that they do. By marking up your mortgage interest rate to line their pockets at your expense, you'll be paying thousands of dollars more for your mortgage financing just in the early years of your loan. Now, we're really getting into the meat and potatoes of the course here, so if you only take one thing away from these videos, make sure you understand how your mortgage company marks up your interest rate. Here's how it works. For every 0.25% your mortgage company marks up the interest rate, the wholesale lender pays them a bonus of 1 point. Of course, they'll never tell you they're doing this, and in the case of a mortgage company or broker, their markup is buried deep in their disclosures. Banks, on the other hand, as you already know, don't have to tell anyone what they're doing because they're exempt from RESPA laws. Now, the extra interest on your loan makes it significantly more valuable on the secondary market because lenders receive most of the interest up front. Mortgage loans are front-loaded with interest, meaning you pay most of the finance charges in the early years of the loan. Okay, let's take a look at an example of how this works. Suppose you're going to refinance your mortgage for $200,000. And the mortgage company tells you that you're going to pay 1 point for the origination fee. Well, as you know, 1 point is 1% of your loan amount, and in this case it's $2,000. And then the mortgage representative tells you that you qualify for a 6.75% interest rate, which you think is reasonable, so you agree to the terms and take out the loan. Well, what the mortgage company isn't telling you is that you actually qualified for a 6.0% interest rate, but they've marked it up to 6.75%. Now, because they overcharged you and you agreed to pay this, the mortgage company receives 3 points. Remember, they get 1 point for each 0.25% they mark you up, for a total of $6,000 as a bonus for overcharging you. So let's break this down. The mortgage company gets $8,000 for originating your loan, and you pretty much get screwed because you agreed to pay 0.75% more than you needed to. Now, you may say to yourself, what's 0.75% between friends? Well, this 0.75% amounts to thousands of dollars in unnecessary mortgage interest, and that's just in the first years of your loan. So now when I tell you that these people are just like used car salesmen, you've got the numbers to show it, and you understand how the scam works. Now, this unnecessary markup of your mortgage interest rate actually has a name. When the markup is charged by a mortgage company or a broker, it's called yield spread premium. When the markup is charged by a bank or a broker bank, it's called service release premium. Now, we've already talked about why you shouldn't take out a mortgage loan from your bank, but what's a broker bank? Broker banks are simply banks pretending to be mortgage brokers. They do this to exploit the same loopholes in the disclosure laws as banks and prey on homeowners that just don't know better. Broker banks are nearly indistinguishable from any other mortgage broker, both in the offline world and on the internet. You should never refinance your mortgage with a broker bank for the same reason that you should never take out a mortgage loan from your bank. One example of a broker bank operating on the internet that you need to avoid is eloan.com. So how can you tell if your mortgage broker is really a broker and not a broker bank? Ask them if they close on the mortgage loan in their own name. If the answer you get is no, then you know that they close in the name of the wholesale lender and that you've found a genuine mortgage broker. eLoan, for instance, closes in their own name and is therefore a broker bank which is exempt from all disclosure laws that protect you from abusive lending practices. Never refinance your mortgage with eLoan. Okay, let's get back to retail markup for a moment. Many mortgage companies have different ways of disguising this markup of your mortgage rates. Sometimes they'll call it overage, other times it's called broker rebate, lender paid fees, or even lender paid compensation. Like that's supposed to make you feel all warm and fuzzy inside, like you're getting a good deal because the lender is paying the compensation. Well, this is really just a slick marketing trick to divert your attention away from what they're actually doing with your mortgage interest rate. Okay, now that we've talked about retail markup and you've learned about yield spread premium, what can you do to avoid paying it? Well, avoiding the markup of your mortgage rate needs to become your first priority when refinancing your mortgage. And we're going to talk about exactly how you can do this in a later video. But that's going to do it for video number 4. Your action step for this segment is to brush up on your mortgage vocabulary. I'm going to send you off to a list of industry terms so you'll be able to sound like a mortgage insider. Use these terms correctly, and your mortgage company will be much less likely to try and take advantage of you. Okay, here's your action step. Go ahead and brush up on mortgage terminology, and I'll see you in the next video.